Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. So like I said, with these a few broadcasts, we're going to be focused on the Forex squad because I'm starting to get a lot of questions about Forex trading and all of that stuff. So I wanted to come out here and share some information with you. But today we're going to specifically talk about the 475 mark-to-market election. Okay. This is critical for people who have qualified for trader tax status. Now, not everyone is going to qualify for trader tax status. This is not something that trader tax status is not something that you can elect. It is something that you qualify for. So one year you might make a trader tax status and the next year you may not. There are several moving parts and guidelines for you to qualify for trader tax status. We're talking about a minimum of 720 trades a year, continuous trading, spending 4 hours a day on your trading. So it's not like you can decide in November to go and bust out 720 trades and think you're going to qualify for trader tax status. It doesn't work that way. There's a lot of moving parts for you to qualify for that. And part-time traders have a harder time qualifying for trader tax status than full-time traders. Part-timers have a harder time than full-time. Okay. So that's where, for full-time traders, for people that do qualify, this is where the 475 election can really save you. Because one of the things the questions that I get a lot is, how much can I deduct in losses from my trading activities? Well, that trader tax status is going to be key for you, because if you don't qualify for the trader tax status, then you are considered an investor, and then you can only deduct $3,000 of capital loss, and that capital loss offsets any capital gain. Okay, so it doesn't offset other types of income. All right. So now with the 475 election, you have to make this election by the filing deadline, which is normally April 15th. Okay. This is something that you elect. Let's see. I've already covered a lot of this stuff. I got my notes here because I want to make sure that I get it right. So understanding that people that actually qualify for the trader tax status and make the 475 election, then we're talking about being able to deduct business losses. Okay. It's treated as ordinary income, ordinary losses, not as capital gains and losses. Okay. And what this does for you, if you qualify, and you're going to hear me say this over and over again, because the last thing I need is for someone to say, okay, she said that if I trade as a business, then I can deduct this. No. Trader tax status. You must qualify for that first. And that's why it is imperative that you work with a competent professional that deals with trading in order for you to make this election, because you might not. Okay. For real. Okay. So you if you qualify for trader tax status, then you can then deduct the business income, the losses, and have the business deductions, the home office deductions, any of your equipment, types of training, all of those types of things that you would normally be able to deduct in a home business, then you would be able to deduct that if you elect the 475 election, if you make that election. Now, if you don't, then that might cause you some problems. So you definitely want to make sure you make a timely election. So the other thing is, and especially when it comes down to trading, people can lose a lot of money when we're talking about trading. So if you only make the investor, right, then you can only deduct, $3,000. So if you lost, $20,000 in a year, okay, you can only deduct $3,000 and carry the rest forward. Where if you elect 475 and you qualify it for the trader tax status, then you can deduct those losses against other income, whether it's W-2 income, if you have other businesses or what have you, okay? But now at the same time, I want to caution you on continuously losing money, okay? Because you have to be in the trading business with the intent to make a profit, for that to be your living, okay? And this is why it's much more difficult for part-time traders to qualify for the trader tax status, because, this is going to be a primary or supplemental living. That has to be the intent, not to get tax write-offs, you guys. Please stop with that. So, but when it comes down to the 475 mark-to-market election, there's a lot of rules, okay? I will not even begin to go and list these rules, because if you take them out of context, then you and make this election, it can come back to bite you in so many different ways. Okay, there are several cases out there. There's precedent where there have been people who have made this mark-to-market election and did not qualify for trader tax status. The IRS went back and they had to pay money back with penalties and interest. Okay. So this is why I'm telling you that, you need to work with the qualified professional. But having the 475 mark-to-market election, that is what helps you to be able to deduct your trading activities as a business, not just because you're trading. Okay, because otherwise you are an investor, and if you lose a lot of money, well, you can only deduct $3,000 in a capital loss, and that only offsets for capital gains. Okay, so if you are a Forex trader and you don't know whether or not you would meet the qualifications for trader tax status, I encourage you to reach out to your tax professional or your CPA. You're welcome to book a consult with me. I'm not the only game in town, but I'm telling you, this is not the time. This is not the profession for you to go off all willy-nilly and try to do this yourself, because if you get busted that you have not done things right, holy cow, that can be really detrimental. Okay. There's a case of a doctor who, he got out of medical practice and he decided he was going to trade. And so he claimed this stuff on a Schedule C, but he did not make the timely mark-to-market election. But he claimed these business losses, and the IRS came for him to the point of $2.5 million. Okay. So I just want you to understand, and also electing the trader tax status, it doesn't mean that you shouldn't do it, but understand that you can be under more scrutiny because of the potential for people to claim a status that they really don't qualify for, and the IRS isn't having it. Okay. One of the questions I also get is with cryptocurrency. Can cryptocurrency traders qualify for trader tax status? It really just depends on how the SEC qualifies or identifies your particular exchange. Okay. There are some that qualify as securities and some that do not. As a whole, cryptocurrency is an intangible property. Property does not fall under trading. Okay. But you can have some, like some coin offerings. You have, new coin offerings, initial coin offerings coming out all the time. So it just depends on how that particular coin is qualified. If it qualifies as a security, then that's something that the SEC has to determine, not Lusandra, okay, or any other tax professional. It is how they're filed with the SEC and how the creators identify that particular coin. So it's not something that is a definite yes, and it's not something that is a definite no. Okay. So, So with trading, I know that there are, because of the internet, because of software, there are a lot more traders that are out there in the industry. There are people that are making lots of money, but even the amount of money does not determine whether or not you qualify for the trader tax status. The amount of loss does not determine that. So it is really a big picture thing, and it's not something to be taken lightly where you say, okay, well, if it's wrong, then I'll just go and amend. Okay. Do not play those kinds of games. So I hope that I am really literally beating this horse to death so that you understand the gravity of what this does for you. Okay. And if you get this wrong, of what it will do, what of the consequences. Now, I also want to reiterate really checking out your CPA, really talking to your tax professional to really understand if they have the capability and understand the trader tax law. Because if they don't, they can also wind up getting themselves in trouble because there's case law where a CPA of 30 years did not understand the 475 election, and his client came back and sued him for a whole boatload of money. So you as the consumer, you as the trader, you want to make sure that you're dealing with somebody that understands the trader tax law. Okay. And you know what? And if they don't, it's okay because everybody has their specialties, right? Like I tell you all the time, if you're a farmer watching my videos, I love you, but I would not be an effective tax professional for you. So you got to know what your tax professional specializes in and be okay with going to someone else that may understand your profession more than who you're dealing with. And that's just the truth. And as professionals, okay, now I'm talking to professionals that are watching this. If you are not competent in this area, be okay with referring that client to someone else instead of just, talking about, I'll figure it out. No, you cannot figure it out. If you don't know what you're doing, then you need to refer them to someone else, whether it's another enrolled agent, whether it's another, CPA, whoever, right? But just make sure that you're referring those clients to competent people. Okay, so we all don't wind up in the Hoosgow and writing fat checks to the government because those suckers hurt. Okay, I ain't trying to write no extra checks that I don't have to write. Okay, so I hope this gives you something to chew on, something to think about. And and again, if you're a Forex trader, now's the time to go back and look at your trading activity to see where you fall. If you're close, that minimum 720 up to 1,000 trades, and you've been doing it all year continuously, and you have had at least 15 trades a week. There's all sorts of things. Okay. If you've had all of that stuff, then you may be considered, not definitely considered for trader tax status. But again, there's lots of moving parts. So it's not one right answer for everybody. One person may qualify while the other one doesn't. Okay. So that's why it's important to seek competent help. Okay. So thank you guys so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come here to get your questions answered about your home business taxes. All right. Have a fantastic day, and I'll see y'all next time. Bye.